Hi, welcome to the Graham Team's Housing Report for fourth quarter 2022 and what the projections look like for 2023. So 2022 was a flat line. Home prices ended up at $425,000 for a median sales price for about approximately a 1,900 square foot home. And that's the exact same place we started at the beginning of the year. So what has affected this? The biggest impact has been buyer demand. As you can see on the grid here, we are down about 29.6% year over year for buyer activity. That means closed transactions. In the beginning of 2022, we started out as a strong seller's market, and then we quickly transitioned midway through the year to a buyer's market. We are starting to see things level off towards the end of the year and moving into 2023. So as we reported in third quarter, we saw a stare down occurring between buyers and sellers. Sellers were not willing to drop their prices to what buyers were willing to offer, and so homes kind of sat on the market. We did see this break in the fourth quarter, particularly more in December, where buyers and sellers were starting to meet in the middle and transactions were being completed. Activity in January has also been picking up, so we expect the increased buyer demand to occur in January. I wouldn't say it's off to the races. However, we are starting to see a lot more activity. I'm sure it's going to take no one by surprise why we've seen this decrease in buyer demand, and the core reasons that are leading this is the rise of interest rates from those record low levels at 3% to a more median average interest rate of 6%. And you combine that with the median sales price, and we simply priced many of the buyers outside of the market. They just cannot afford to purchase a home. The median sales price of $425,000 is at an affordability index of 6.14. Anything above 6 is considered alarming or not affordable. Of course, California has been outside of that 6% range for a long time, but that's what's attracted buyers to Southern Nevada. And so getting below that 6% range would be ideal. Right now, only 33.1% of Southern Nevadans have a median household income sufficient to qualify for a median sales price home. A lot of medians in that sentence. According to the report provided by Applied Analysis, they expect this number to go to 40% over the next 5 years.
Interest rates for 2023 are predicted to stay in the 6% range. This graph shows predictions from top mortgage providers. It's important to remember that forecasting is not a guarantee, but rather a guide by those in the industry based upon current economic factors. In the last 3 years, we have seen anomalies impact the U.S. economy, which has had a positive and negative effect on mortgage rates. For example, COVID, the war in Ukraine, and a sharp rise in inflation. Also, just a reminder that interest rates are currently at the 50-year average. So in hindsight, rates are not as high compared to previous years, such as the 1980s. The impact was clear in 2022 that the reduction in the California migration affected not only the number of transactions for 2022, but also the amount of cash buyers. The graph below shows which states contributed to the migration to Southern Nevada the most. Also, here's an interesting fact. 8.4 new residents moved to Southern Nevada every hour. If we ignore 2020, the year of COVID, 2022's population growth was at a 5-year low, just slightly. And in 2021, the population growth was 80,000 people year-round, comparable to 2004 to 2006. We can expect the California migration to continue at a slower rate in 2023. Do buyers see value? In 2022, buyers, especially local, were pushing back on asking prices and felt that homes were not worth the asking price. With December's reset into 2021's median price of $425,000, buyers are starting to see the value again. With essentials costing more and paychecks not covering the basics, this will continue to impact the buyer's ability to purchase a home. The recent reduction in gas prices should start to be recognized in all sectors, and we are all crossing our fingers that we will return to a normal inflation range of 2 to 4%. Uncertainty was causing anxiety to both buyers and sellers last year. It appears people are becoming more certain and are starting to rethink their home ownership goals. Mortgage applications, which are a great preview into the future buyer activity, are up in January by 39%. Now, before you can say, wow, the number was so low in third and fourth quarter that it's easy to make that jump from lower levels. However, that is a positive indication that the market has settled down a bit. We expect sellers to have more activity on their home sales in the first quarter of 2023.
So what do we think the 2023 housing market is going to bring? Well, we expect the median sales price to stay pretty flat throughout this year. We might see some ups and downs, but we think we'll hover around that $425,000 median sales price most of the time. In regards to interest rates, we think they're going to fluctuate between 6.5% and 5.85%, and it's just going to depend on the economic factors that are coming out that month in regards to job reports, inflation, on what banks are going to be doing, how much they feel like is risk in the market, and rates will be fluctuating, we believe, between that range. Foreclosures, we anticipate to stay extremely low at the same levels they are today, simply because our sellers just have too much equity in the market in their homes, so there is no reason for them to take a discount on their homes. For the rental prices, we were a little aggressive on what we thought was going to happen with lease rates in fourth quarter. They ended up being pretty close to third quarter, so we saw them flatten out around $2,000 for about a 1,850 to 1,900 square foot home. So we anticipate that to kind of stay in this next first quarter. Let's discuss some buyer opportunities for this year. Buyers will continue to have some good selections to choose from. They're not going to have to settle. They're going to have an opportunity to go through numerous homes to make a wise decision. However, we do not expect homes to be on the market as long as they were in that second half of 2022. So timeframes will be shortened, but buyers will still have sufficient time to go through inventory and make some selection decisions. It is still extremely important for our buyers to be prepared. So having that pre-approval process completed before you start out viewing homes sets you up for the most successful game plan. We do anticipate buyers still being able to come out of pocket less money than they were in the previous 2 years because they can get some closing costs given to them from the seller's concessions, and also they're not having to offer overappraisal or over ask price, so that we expect that trend to continue through this year. With interest rates to remain in that 6% range, just slightly above or below throughout the year, buyers are going to still be challenged with affordability. The amount of home that they can afford is not as much as it was the last 2 years. So they're probably going to have to decide what's more important to them, home ownership or continuing to rent or buying a home that might be a little smaller than they're currently leasing or in a different neighborhood. So lastly, as we mentioned, it's still going to be expensive to rent a home. So you're paying $2,000 for the next 3 years on a home. You would just pay your landlords $72,000 and you have no equity in your pocket or no gain. So what do our sellers need to anticipate going into 2023 if you're looking at selling your home this year? Extremely important. Now, we always give this advice is to price your home at market, not below market and not above market, because we do know that when you price your home at market price, that's going to give you the best outcome, the best net proceeds to you. Be realistic about your home's value. What upgrades you put in the home. If you're looking at a comparable home in your neighborhood and they have upgraded their kitchen or master bathroom or really put some sizzle in the backyard and your home doesn't have those same amenities, then you need to be realistic that we need to adjust those prices. Same vice versa. If you've upgraded your home and the last comparable home had more average finishes, then you can adjust your value for that as well. But your real estate advisor here at the Graham team will walk you through that process and what the appraised value is for those amenities and upgrades, and also what the market demand is. The other thing our sellers need to know is you're going to have a little bit more patience this year than you had in previous years. More buyers are going to come through the home. They might come through 2 or 3 times before they make a decision to make an offer on your home, because buyers have the opportunity to go through a lot more product right now than they have in the past. So it's probably going to take longer. You're probably at a 60 to 90 day window. So put on a little bit of patience and expect a few more buyers to come through that product through your home, because they're making a big decision and they want to make sure they're making the right one. Thank you very much for allowing us to share this market update with you. If you would like some additional details, maybe on a more specific community where you live at or one where you're looking to purchase, it would be our pleasure and honor to provide that information for you. If you have friends and family who would also find this information helpful as they're making a home purchase or home selling decision, or would just like to know what's happening in the housing market, please share this link with them. We'd greatly appreciate it. It is our honor and pleasure to provide you this information and to be your real estate advisor. On behalf of all of us at the Graham team, thank you.